Hello everyone. Good evening.
Hello everyone. Good evening.
So I've come here to invite you to my upcoming webinar, which is happening on 9th of January. That is Thursday at 4 p.m. The details of that is mentioned in your description. Now, why will you attend that session? So there are three or four things which I would like to discuss here is going to give you a perspective of why you would attend that session. So, first thing would be what is the opportunity in financial services space which is available going ahead. Considering 2019, what has been the scenario of the market? Market has reached all-time high. Government has taken a lot of steps to boost the economy. Some of the steps which has been taken is to reduce the corporate tax and also to reduce the tax on startups, which will show its effect in next 2 quarters. The earning boost which is expected is around 10% on the broader earnings of the market, and that will show its effect. So 2020 is also a year, promising year for our market. What is the scenario of economy? Where are we headed? So if we see, I was going through one article in The Economist. It was published in the year 2015, and they had made a projection of India's GDP. So by the year 2050, India's GDP will reach, as per their estimate, to around 60 trillion US dollars. So we would be third largest economy globally after China and India. Right now we are 2.7 trillion US dollar economy. So you can imagine the quantum jump that can come going ahead. Even if we discount that by 30%, we can reach a figure of 40 trillion US dollars. So it is obvious that as the economy grows, the financial instrument investment in financial instrument grows, and the level of markets will also grow because it has effects on its earnings in the business and the stock market, which chases the earnings of the businesses. Second thing which we will be discussing is there are two important things which has happened after independence, which is unique to our economy. Number one, do you know that India is becoming younger year over year? India is the only country which is going young year after year. The average median age of an Indian is 28 years, and the life expectancy is 71 years. So you can imagine the earning phase or accumulation phase of an Indian. It stretches to around 42 years. Now, when a person earns money, either he spends the money or he invests the money. Now, the avenues of investments till now were very limited, considering the Indian economy. People were primarily investing in real estate, bonds, FDs, or maybe direct stocks. But contrary to this, there was a statement by Mr. Vikram Limai of NSE that only 2.5% people are investing in Indian stock market. So on one side, you can see there is a lot of growth that is expected in the businesses, in the population, in the GDP growth. But on the other side, the investment in financial instruments is not that much. And the primary reason is awareness. So, considering the mutual fund investments also, only 1.5% people are investing in mutual fund. Now, there was demonetization which happened in 2017, and you can see in last 2.5 years the asset under management of mutual fund as a whole has nearly doubled. So it has gone to around 25-26 lakh crores. I remember in 1997 there was a prominent company which came up with a concept of SIP. At that point in time, the SIP monthly was zero. But if you take 10 years, that is from 97 to 2007, the SIP book every month had grown from 0 to 700 crores every month in the year 2007. And if you see the SIP book today, as on 2019, and in last whole year, the average SIP book size has been around 8,200 to 8,500 crores. So you can imagine the money or the savings that is coming to financial instruments or financial savings. So if we consider 8,200 crore SIP book every month, it is around 1 lakh crore, which is a stable money which is coming to mutual funds for investment, and this is going to continue to grow. In India, there was one innovative product which has been introduced, which is bond ETF. Bond ETF is one unique product which has been introduced in India recently, and it has got a huge response. So these are the opportunities available in financial services space. This, we are going to take the benefit of demographic dividend for next 37 years, that is till the year 2052. Again, I was going through one article in Economic Times that the average dependent Indian is lesser than the average independent Indian, and this has happened in the year 2018. So the independent population is growing. Independent in the sense that, suppose in a family there are four members. 10 years back there was one earning member and three dependent, and today if you see, all the four earning members are earning, and that's how, when they are earning, they are spending the money and they are investing in instruments which are easily accessible. Third development that has happened is, in financial services space, there is a acceptance of technology. So financial services is becoming a fintech space. So how you can utilize technology? Making an SIP is very simple. If you go online, any kind of investments is possible online. The volume in NSC through mobile internet is increasing. So these are the opportunities and these are the possibilities, but still the penetration level is low. So how you can reach out to the masses? Those of you who are either related to financial services or are willing to create a career and want to take the benefit of this demographic dividend going ahead, and want to set up or start up a part-time business, then definitely this webinar will help you in terms of developing and in terms of starting this particular venture. Not only this, there are other innovative products which are being introduced to financial services. There are a lot of life insurance products, innovative life insurance products which has been introduced. There are a lot of health insurance product which has come to the market. The PMS or portfolio advisory services are being introduced, and the for ultra HNI there are products which are categorized as AIF which has been introduced. So there is a huge scope of growth going ahead into the future, and our government has a target of reaching 5 trillion US dollars. Right now, the global scenario and domestic scenario is, considering the present economic state, is seems difficult, but then the government is taking these steps to boost the consumption and reforms. So I'm going to discuss all these points in detail on 9th of January, that is 4 p.m. The registration details or registration link are mentioned below. So I would suggest you to register yourself to attend that session, and I will see you on 9th of January at 4 p.m. So with this, Bhavik signing off for today. See you on 9th of January. Thank you. Goodbye.